So well, while photo finish for some of our sports person, it's been quite the photo finish actually for the Dow, or rather the global markets, and the kind of recovery that they've been seeing. I mean, the Dow was up 300 points overnight.
Siasha, what caused the sell-off in terms of the technicals and in terms of the news and in terms of the event? Luckily, that has not snowballed into any kind of a selling stampede. So what we saw on Monday was, well, largely unwinding because of reversal in yen carry trade. Fears that there could be a war, at least in Middle East. And then there were concerns that US economy will slip into recession. Those assumptions have not translated into a real fear. Bank of Japan has stepped in and has clearly indicated that, folks, we are there. We are the backstop, and we will not increase interest rates till the time markets are not stable. Second, luckily on the geopolitical front, nothing has really spiraled up, which would indicate that a war, may actually be around the corner. And third, I mean, yes, markets reacted to the fact that there could be recessionary fears in the US economy, but after that we've not seen any new data which in a sense could really have an impact in terms of growth concerns. So we are in a stable market. We saw a massive one-day downtick. After that, things are looking up. What I like about the setup is that it is not a V-shaped recovery. It's this gradual stability which is coming in all financial markets, from equities to bond yields to what's happening even in Bitcoin. So bond yields are up. Crude has bounced back. Copper is up. Bitcoin has stabilized, SGX is up, and US markets sustained almost the entire session in the green last night, which means that we are looking at what could be called as a stable setup, and that stormy Monday in a sense shook up a lot of people. It rattled a lot of trades. It reversed a lot of technical arbitrage. But thankfully, now that you've heard from BOJ, somewhere there will be conviction that central bank is watching.
Thought that commentary from the BOJ would have such an implication on the global markets. Not to say that it's that alone, but yeah, the deputy governor's comment saying that Japan is not in an environment where we'll be behind the curve unless we hike rates at a set pace. So clearly allaying some fears. And yes, indeed, we have seen that sharp rebound, particularly in the Japanese markets, and then of course across the rest of Asia and the globe. But let's dissect our own markets and the trade that panned out yesterday. We did close sub the 24,000 mark by the time we wrapped up trade. So it was off from the top of the trading day. No deep gashes, but nonetheless, we did find support around the 50 daily moving average. And more importantly, the volatility index, or the India VIX, cooled off nearly 8%. Then there were those pockets as well that were in the spotlight. For example, those textile stocks that rallied amid the Bangladesh crisis. Real estate continued to remain in the spotlight, and the rupee as well recovered from the all-time low. But Nikunj, given the fact that we have seen this massive pullback in the global markets, what's that spelling for our own?
See, Avan, we had a bad Monday and we had a stable Tuesday. And I think we could be in purely more of the same, which is that you may actually see market just calming. I mean, there could be just days of back and forth movement with, let's say, not large intraday spikes, but you will not be able to catch a particular trend. I see that happening. I don't see that there is a mad rush for anyone to really come out and buy the market in a hurry, and that is not the ideal strategy. But since global markets are looking stable, you may actually see some cherry picking happening here and there because institutional investors are sitting on cash and they pretty much have been waiting for this kind of a decline. My sense is that there is new leadership which is emerging, and that new leadership is clearly evident in this market fall. For example, defense stocks have fallen, railway stocks have fallen, several PSU stocks have fallen. They might not be the first ones to bounce back like they did on the election day or they did on the budget day. FMCG or consumer staples or rural facing companies, they are in a sense, looking that they are getting ready for a better second half. So that sector has started outperforming, from a Britannia to an HUL to an ITC. That space looks good. I think OMCs is the only bright spot which I can see, because oil is down, those stocks are cheap. That becomes an interesting pocket. So you'll have to really pick up these themes. But what this kind of a technical, what the shakeout has done is that it has, in a sense, forced some of those weak hands out. The compulsions of margin selling has been realized. and there is going to be a churn in terms of sectoral leadership, at least in the short term. That's how I view the market.